welcome to all of you. So Lauren, maybe I can start with you. This question about, what is SAF's role in sort of the wider decarbonization options within aviation? United has invested heavily in SAF production and tech ventures. Do you see SAF as the central pillar, and what's sort of the broader strategy in which it sits?
Yeah, so it's great to be here and just have a very pragmatic conversation around where aviation is. As you mentioned, 3% of global emissions, but that number is likely to rise. Aviation is continuing to grow. There's emerging markets that don't have aviation to the degree that we do here in the UK or the US. So we're expecting aviation to continue to emit and increase absolute emissions over time. When you think about how an airline seeks to decarbonize, there's really fundamentally 4 levers that we're looking at. One is renew your fleet. And United has sort of a historic investment in fleet renewal right now. I think it's roughly 800 aircraft we have on order, which is really important from a climate perspective, because every new aircraft you take in, whether it's narrow or wide body, is about 20% more efficient on average than the one you retire out. So material, near-term reduction, super important. But we also need next generation. And so we're talking about new engine designs, new airframe designs, new infrastructure to enable electric and whatnot. That's important too, because we've got to continue to have efficiency in the aircraft that we fly. Operational efficiency is the third one. That's kind of business as usual. Just burn less fuel when you don't need to burn it and use smart operations to enable your flight. And then finally, that leads us to SAF. Yeah. SAF for United is going to be more than 60% of our reduction curve. It is really, really important. I mean, this is like a pure physics thing. We need liquid-based, energy-dense fuels to put on our mainline aircraft. For regional, maybe electric, maybe hydrogen, probably not in the US, but we do need liquid-based fuels. And we don't have the capacity for some of these emerging technologies in terms of size of the aircraft, storage, or the infrastructure to sort of look at those in the near term. So SAF, chemically identical to conventional jet fuel with lower emissions because it's derived from waste, it's derived from renewable products, and I'm sure we'll hear about that. So it's a drop-in. And in fact, United today, or at least last year in 2025, of our 7 hubs in the United States, we had SAF deliveries at 6 of them. And this isn't a voluntary market, unlike the UK and the EU. This is where we are choosing to demonstrate that there's an opportunity to bring in this diversified fuel supply. So it's material, it's important, we need it, we need to get rid of the emissions, but we are very early, and you'll hear more about that, in developing the market. So this is like ground zero.
Great. I really appreciate that. And we're going to absolutely get back into sort of how the market develops and the role that sort of each of you is going to play in that. Matthew, Heathrow is obviously one of the busiest airports in the world, sits at a center of global aviation network. From your sort of airport perspective, how central is SAF, and what role exactly do the airports play in the delivery of SAF? I mean, in the near term, but also in SAF sort of development overall.
Thanks, Philip. And great to be here as well, as Lauren said. So if I take each of those in turn, how central is it to us as a tool to decarbonise? So absolutely vital, I think, is the message. So we work very closely with a group called Sustainable Aviation in the UK that brings together all of the main, not just airports, but airlines and manufacturers. Actually, we were the first part of the global aviation sector to publish a net zero transition plan back in 2020. And we continue to update that since. And there are four main tools in the kit. I'm going to roll together. I'm going to give you a slightly different 4, which risks confusing you. I was debating doing this, but this is the UK industry roadmap. So I'm going to stick with what we said, but I'm going to roll Lauren's 3 efficiencies into one: more efficient operations, rolling out new aircraft, and then developing new aircraft types that are more efficient. Really important, Lauren gave the figure of potentially a 20% improvement in each generation of aircraft. The challenge is against those growth forecasts globally, not enough efficiency on its own, not enough to get you bending the curve of emissions down towards zero. SAF is the second measure that we look at. And if you look across the range of roadmaps published by governments and industries around the world, typically SAF is anywhere between 40 and 70% of the total journey to net zero. So a really significant part, and there's a good consensus on that. I'll come back on SAF. The 2 other tools in the kit that we talk about are zero emission aircraft, so the opportunity for hydrogen aircraft now, really exciting, and we think still has potential, but probably will take longer to develop. So initially, probably with smaller aircraft serving shorter routes, perhaps until you get to the second half of the century. So if the goal is net zero 2050, important to continue research and development there. Probably we think that isn't going to make a material difference to emissions in this half of the century. And then the final part of the picture for us is carbon removal. So any residual carbon that's left in 2050, sucking that out. And in any of the roadmaps, that plays some role as well. And I'd agree with Lauren's point, the whole beauty and advantage of SAF is chemically identical and a drop-in fuel. So you don't need to buy a new aircraft or invest in a new fueling system. What you do need to do is build the plants to produce it. And I'm sure we'll hear more from SkyNRG and talk about that. The airport role, to the second part of your question, Philip, is a really interesting one because we are, and just to state what maybe the obvious, but just to be absolutely clear, we're not actually as an airport in the fuel value chain. We don't make fuel, we don't buy it, we don't distribute it. Actually at Heathrow, the fuel network, the hydrant system that delivers fuel to aircraft is actually run by a separate entity from Heathrow. So we don't really touch fuel, but equally it's vital to our license to operate and license to grow. So we looked at this and said, if we want to expand the airport to respond to the demand that Lauren outlined and to protect the amazing benefits of aviation. We need to decarbonise. We've got to scale SAF. What can we do? And we reached two conclusions, and I'm sure we'll explore these a bit more as we go through. First, SAF has a green premium today, 2 to 4 times typically the price of kerosene, as other lower carbon technologies do in their early days. So that's a classic market failure where you need market signals from government. We think in the UK, a blend of mandates and floor prices, sticks and carrots, I guess, and I'm sure we'll explore that a bit more. We also said, while that policy is coming in, because it won't come in overnight, what else could we do as an airport? And we said, well, actually, we raise landing charges. Maybe we can create an incentive pot. So airlines that want to use SAF at Heathrow can bid into that pot to uplift SAF, but close that price, the price premium, the price gap between kerosene and normal SAF. And happy to talk a bit more about that. I would say that latter has been effective in getting SAF flowing to Heathrow, and we think sending a signal to the market. So 2024, the latest data we have, we think around 17% of global SAF production came to Heathrow, which is kind of great. But to Lauren's point, it's early days as well. So we've just got to keep driving scale.
Great. Jez, as we've heard here, I mean, it's early days. Critics, but it clearly is sort of a niche fuel now. I guess the question is SAF scaling fast enough to support aviation's, the kind of ambitions that we've heard about? You have just opened a new production plant, so that's great news. Maybe you can actually start by telling us a little bit, like, what is SAF exactly? What are the inputs and what are the outputs of production that's keeping the cost where it is? But then can you tell us a little bit about this scaling challenge?
Yeah, absolutely. Thanks for having me, first of all. I'm very happy to be on the panel. I think wanted to pick up as well on what Lauren said about ground zero there in answer to the question, because I think, so SkyNRG has been around about 16 years. So it started with 3 guys in a coffee machine, and actually we supplied the first flight that used SAF. 16 years later, we're now at 0.5% global jet fuel, which is our part in that is extremely small, no production. But we've played a role in that, and we've now got the largest team in the world associated with SAF. What we've done in that time, it's taken us about 7 years to actually come to a point where we can put steel in the ground to develop our own facility. So 300 million euro investment, KLM taking 75% of the offtake for 15 years, 100,000 tons a year, 12 banks supporting that, countless other partners, EPC contractors, licensors, the list goes on. And that's really what it's taken to get this first facility off the ground. This is a world first project finance, non-recourse facility. That basically means that it's not a Shell or a BP using their balance sheet to build a facility. It's actually a group of organizations coming together without the funds, but with bringing all these parties together to build something. And that's what it takes to scale the SAF industry. And that's where we say we're at ground zero now. We're at this 0.5%. We're hoping it'll take a bit less time to get to the next 0.5%. But you asked, so what goes into SAF? You basically start with used cooking oil or other waste-based oils. You can also use crop-based oils. We don't like those so much. You can use other waste-based things as well with different technology pathways, but you're starting with this renewable feedstock. You need to get that to a facility. Today, 99% is called heifer. That's basically used cooking oil and waste-based oils. You put that actually through a traditional refinery unit. So actually you've got the standard sort of OPEX on that plant. You've got your natural gas inputs and your hydrogen and all these kind of things. You then need to take that to an airport, and there's lots of different hubs around the world where SAF's being supplied. Matt mentioned Heathrow's incentive, 17% of global SAF production going into Heathrow, and that is the best SAF incentive, well, airport incentive in the world right now. There's others sort of in California and places like that.
I point out, Jez and I did not talk before this.
No, that was,
thank you.
It is. So that's that's where we get SAF in those airports. And there's some airlines using SAF. There's not too many using it in that much. Maybe one thing we'll get to is about voluntary demand and the role of corporates in reducing emissions and using SAF.
Yeah, absolutely. Well, I mean, in terms of your project and getting it to be bankable, I mean, the fact that it got project finance, I mean, the fact that you got this advanced purchase commitment from KLM seems to be critical, right, to bankability for
Absolutely.
the rest of the financiers.
Yeah.
Can you maybe just talk about, is that sort of the main lever that you saw in terms of getting to bankability? And then I'd like to get to Lauren and talk about
Absolutely.
what you guys think about advanced purchase commitments.
It's one of the levers for sure. It's a very big lever for sure. I think we're very fortunate that SkyNRG and KLM have had a very fortuitous partnership over the last 16 years. They've been a shareholder in the organization. So having that offtake, they are guaranteeing that they will take the fuel at whatever price it comes out of the facility. That's ultimately kind of how that is set up. And the reason we need that for a project finance facility is so that the people lending us money can be sure that they're going to get their money back. And that's another huge part of this is the equity side, but also the debt side. So we're fortunate as well to have big investors like Macquarie, APG, big Dutch pension fund that are on the equity side. And as I say, 12 different banks working together to provide hundreds of millions of euros to support the debt side of the project as well. So those have to come together. And another part of the sort of offtake is also the corporates. We have engaged sort of 10 different corporates who are all committed to actual SAF C offtake, and we'll get into that a bit more as well, from that facility. And that was a huge demand signal at the time. That was not something that others were doing at that time. And that's something now that is a global mechanism that's happening. So that's been a huge element to what we're doing. We haven't touched on EPC contractors, LSTK, turnkey construction, on licenses and liquidated damages for delays and performance and all these things. So there's so many elements that go into this. I think 200 contracts were signed at the financial close of that facility with all these different actors. So a lot goes into that, and that's why collaboration is so important in this sector. I think we need €1 trillion of investment to get to 2050 and the amount of SAF that we need. So a lot of work to be done.
Great. Lauren, as I promised. So, I mean, these offtake agreements, we talked about all these different pieces that go into it, but clearly the offtake agreement is a really important signal for finance in terms of a demand signal. It really is shifting a lot of risk, though, especially if some KLM is buying it at any price. I mean, shifting a lot of that risk onto the airlines, onto the buyers. How do you engage in sort of delivering those demand signals, and why? What's the incentive for you?
Yeah, it's the classic chicken or the egg. Let's have that conversation. So I think it's important to recognize that there's two types of SAF projects that come to market. Those that are essentially brownfield. So you've got existing infrastructure, you need an additional conversion kit, you throw in a little capital, and boom, you've got some SAF. Then there's greenfield, and a tremendous credit to SkyNRG and all of those innovators out there that are really driving the market forward. But high capital, volumes range significantly in production capacity, and really, really low to this point in time success factor. So can you actually make it to turning the wrench to actually have some oil come out? It's been all over the place. And so I think we need both, and we need to continue to invest in both so that we drive scale in the near term and then have the types of technologies we really want over the long term. I would answer your question by saying it depends on what market you're in. So KLM and other carriers here in the UK and the EU, where you have a very heavy stick approach, we're mandated to take on a certain amount of SAF within our fuel supply, or the suppliers are mandated, but we pay for it ultimately as a carrier. It's a different kind of risk structure because there's demand that is certain over time, the longevity of that policy. If you look at the United States, we do not have mandates. We do not want mandates. We want the market to drive innovation and drive down costs so that we can actually scale and replace conventional jet fuel because it makes sense. So this is more about diversifying the supply chain, but doing it in a cost-effective way that makes sense with the balance sheet that you're carrying. And that's the next issue I want to address when it comes to these long-term offtakes. If you look at any carrier here or in the United States or frankly anywhere, we are low margin. We are a low margin business. There are many big companies that are low margin. Aviation is a quintessential one. There is no way I could walk into my CFO's office and say, I want a 15-year, any cost fuel agreement because it's good and we want to support the planet. I think I'd get fired. So we have to find a way to really navigate that risk sharing that you were talking about, the business case. So where do you invest at what volumes with what certainty and what risk factors so that we can continue to progress so we get more shovels in the ground because that's really important. But today, I get requests all the time. Can you sign a 10, 15, even 5? And the answer usually is absolutely not. But let's figure out other creative financing. Policy is crucial to this. And I'm happy to jump into the different policy structures, carrots or sticks, that we think are working to drive real scale, because we haven't quite hit those economies yet that we need to hit so that we can actually see a line of sight to more cost-effective SAF supply.
Well, we can go there. Okay. First on the corporate buyers that we were hearing about, that Jez was mentioning. United has supported corporate SAF programs. So maybe you can talk about the role of those early corporate buyers to building the market, but also you mentioned sort of the policies that you would, if we don't want sticks. So what are the policies that you think are the most effective and that United would support?
Yeah. So, corporate buyers are really crucial for initiating the market. And I think we have to be really clear. They're not going to carry the market. They're here to initiate. And what I mean by that, so corporate customers can come to United or SkyNRG or anyone in the value chain that has SAF in their supply and say, hey, listen, I want to reduce the carbon associated either with my shipping of goods or my business travel or any other associated business function. And I want to reduce that on my scope 3 emissions and claim it in my greenhouse gas inventory. There's a transaction you can make, which is the SAF-C, where effectively you come to United and you say, I'm going to give you X amount of dollars for Y amount of reduction. You give me a credit at the end of the year. I'm going to claim a reduction in my scope 3. Everybody wins, because what's nice about that is that United as a carrier in that example, we get to then reduce the green premium associated with sustainable fuels and purchase more. And that's what we want to do. We are the demand signal. But there's only what we're finding is that there are certain types of corporate buyers out there that have high margin, deep pockets, risk tolerance that is patient, which we tend not to see, that are willing to put their dollars on the table for this high cost transition solution. And I do believe that we're pretty close to sort of tapping that out as the transition trigger. And we've got to figure out what is a more sustained approach, which gets us to policy. And so in the US, we had a historic tax bill several years ago called the Inflation Reduction Act. There was a tax credit for SAF production in the US. I will tell you, it kind of blew me out of the water, because the amount of innovation we saw overnight around sustainable aviation fuels in the US was extraordinary. It worked, and it was really exciting. Today, we're not quite in that place. We have a different tax structure. It's called the Clean Fuels Production. It's a lower credit value for SAF, which means, as I was talking about before with the brownfield, there's not enough economic incentive to take that step further, to invest in that extra kit, to have that extra capital on the line so that you can produce SAF. You can just stop at renewable diesel and still make a profit. So we are in the process right now of modifying that policy in the United States. I am really pleased at some of the progress we've seen around it, which probably shocks some folks given the politics of today. But we're seeing a lot of support from all sides of Congress to bring sustainable aviation fuel into the U.S. market with the right kind of tax credit structure. And we have bills introduced right now in Congress, both on the House and Senate side, to bring that credit structure back to where it was before. And so fingers crossed, we're hopeful. We're really pushing through a coalition to get this passed. It's being robustly supported by the Republicans in the United States, so our more conservative side. But I could not be more surprised, pleasantly, that this is progressing and we are out there in front leading this coalition of companies that are really trying to advance support for continuing to increase the tax credit in the U.S. So all about the carrots.
Great. Jez, I'm sure you have something to say about that.
Yeah, I've got to say, I fundamentally disagree with the fact that we're tapping out corporate demand. I think we're actually at a watershed moment. I think we're at a tipping point. With SkyNRG, so we actually brought the book and claim kind of concept to the World Economic Forum. This was 10 years ago, I think. We developed the Clean Skies for Tomorrow initiative with various different corporate entities. Wrote a white paper. RSB, an independent audit body, then created the book and claim framework, which then cemented this mechanism for SAF-C and the reduction of Scope 3 using SAF certificates. In the last 3 years, SkyNRG's SAF-C book has grown 200% annually for the last 3 years. We see that growing at least the same for the next few years. We've been seeing first pilot purchases from sports companies, entertainment companies, universities, tech, pharma, fashion, all these different brands. Anyone that travels for business, anyone that has air freight emissions, they can buy SAF-C to reduce their emissions. It's credible, because it's now included in the corporate net zero standard for SBTI, or it will be by the end of the month. And we're working to simplify transaction, make it easier, make sure we set a minimum standard for sustainability. These things are here now and they're available. And I think actually corporates today need this kind of thing because it's SBTI aligned, where these hard to abate sectors, once you've reduced your flying and, going on the train a little bit more, it's actually, these are the residual emissions that we tackle, and SAF-C is the way to do that. So I had to say that because I think
I hope you're right.
We're in a changing.
I really do. I really hope you're right.
Yeah.
And maybe it depends how it's done. These are sort of these book and claim SAF credits, right? Where these companies are basically buying seats on SAF planes without necessarily even flying right on them, right? Okay.
Well, yeah. So the SAF is disaggregated from the plane that's taking off. So we as SkyNRG, we supply with a global supply chain network, and we supply into global hubs where there's incentives like Heathrow and others across Europe, Asia, and the US. We supply the SAF. We retain. We sell the physical fuel as fossil, and we retain the SAF-C. The Scope 3 attributes, the certificate that you can use to report an emissions reduction. And that is disaggregated from the location. So there could be a flight from Heathrow to LAX. You don't need to be on that flight, but we can sell you a certificate to reduce your emissions from SAF that was supplied in that flight. And that's what's allowed under this system, because this is a global system.
Great. I'm going to go to Matthew, but I also want to remind the audience, we are going to have, we have microphones going around, so have a think about questions, and I'd like to throw it open to the audience when we're done. Matthew, we've heard a lot about, obviously, the incentive structures and also about policy. Heathrow has quite a unique incentive structure of its own. Maybe you could tell us a little bit about that, and also maybe your reaction to what we've heard in this conversation.
Yeah, no, indeed. Happy to. And I think I'd put this all under the bracket of signals to the market that can support an investment case, be they policy or corporate purchase. I guess to a degree, Heathrow SAF incentive. But let me start there. So we first introduced our SAF incentive in 22. So, and bear in mind, at that stage in the UK, there was lots of discussion of future policies to support SAF, but there was no immediate policy on the horizon. So we said, okay, what are the levers available to us as an airport? My earlier point, we're not in the fuel value chain. What could we do? One thing we do is charge our airline customers. So we said, well, how about an option where we increase charges a little bit for everyone and effectively put that in a pot? This is all revenue neutral for us. And we set a target percentage. So the first year, 22, was 0.5%. And at the beginning of the year, airlines would bid in, express interest. Well, I would like a percentage of that. And if at the end of the year, we received evidence that that airline had delivered that SAF to Heathrow, they'd effectively get a rebate, which helped the business case effectively for an airline to invest in SAF. So roll forward to last year, we'd increase from 0.5 in 22 to 3% in 2025. Each of the years, I think we've run the scheme, it's been oversubscribed. So there's been more demand than the target that we've set, which is great. I mentioned the figure earlier, 17% of global SAF supply, we think, coming to Heathrow in 2024. I would say difficult to get exact data on that because it's not, but that was a reasonably solid estimate. This year, we're moving into a slightly different world because, and this starts to bridge your policy point, which I'll say something on in a second. The UK, as of last year, has a mandate for SAF. This year, that will be 3.6%. So we said, well, and I would say on all of this, by the way, this is not just something that we can just go off and do because we're an economically regulated business. The Civil Aviation Authority oversees us, so we need to consult with our airline customers rightly in coming up with these kind of proposals. But we said, well, hold on, maybe if the mandate is already going to drive, say, 3.6% SAF, perhaps we focus our incentive on voluntary uptake in addition to that. So we said, well, maybe it's 2% in addition to the mandate. We consulted on that. We got broad support. And again, that has been oversubscribed. So potentially this year, and let's see by the end of the year, 3.6% mandated SAF, 2% through our SAF incentive. You're not far off 6% SAF. So now the question for us on the incentive is, you can create a financial incentive. Is there sufficient supply that we, as the UK mandate ramps up, you can continue to incentivize above supply? And I think we'll want to continue to kind of test the market each year and see how it's responding and what's the right approach after that. But certainly our customers were keen to have to get some kind of sense of long term where we want this to go, not just a year by year constant adjustment. And so we said, right, we think in principle we'll incentivize above the mandate. What I would say on all of this, though, is ultimately, and I think we'd stand by this position, this is a classic role for the right market signals for government. And I think it's great to hear Lauren describe the latest discussions in the US on this, certainly in the early days of what was then the Biden era Inflation Reduction Act and the tax credits. We looked with some envy at the US and the kind of incentive framework there because you could see how attractive it was to investment. And we found ourselves in the UK, and we're talking to a global audience, but in London. So just to reflect on UK policy, we could see the EU was going much heavier on the sticks and mandates. The US was kind of a full carrot approach. Let's go incentives. So, and the UK's tried to kind of, my words, I guess, but have a blend of sticks and carrots. So there is a mandate rising to 10% by 2030. Initially, the used cooking oil SAF, but then that gets capped at a point to try to send or to start to create a sub-mandate for some of the more advanced second generation SAF. So we've got the mandate, but we've also been very focused on a floor price for that early investment. So to Jez's point on demand risk or creating demand certainty for an investor, if you're an early investor in SAF when the production costs might be higher, how can you be certain that as others come in, you can still recoup that investment? So what in policy wonk speak, the UK government is calling a revenue certainty mechanism, effectively a floor price for SAF, which should be enforced by the end of this year. We think, and certainly all of the producers and investors we talk to think actually that could make the UK quite an attractive place to invest, that combination of policies. But we do need to move, and this is more a message to the UK government, if there's any reps here, but we do need to continue to move rapidly on that, where there is, we think there's capital available, but we just need to attract it with the right investment framework. And we think we'll see final investment decisions in the UK.
Maybe I can just build on that a little bit from a global perspective. SkyNRG puts out a market outlook each year. It's fairly well regarded in the industry. It's available for free on our website. What we do in that basically is look at the different voluntary and mandated demands. The UK with Refuel EU, the EU mandates voluntary demand in the US. The airlines that have committed to a certain percentage of SAF by 2030, for example, as well as China. We were just talking about China before the session. They've got their 5-year plan coming out, I think this week. You said this week, Lauren. So that's gonna make changes. But you've got India coming out with their own policies. Korea, Japan, Australia have been doing some work to figure out which side do they want to land on in terms of incentive carrots and sticks. So we package all that together and try and understand. Lots of assumptions in there, of course, but try and understand what the demand looks like, and then we look at supply, and we look at announced capacity projects, and basically say, okay, well, from now to 2030, there's only so much that can come online in that time. There's so much capacity that is online. There's new announcements coming on. And basically what we see in that is that to 2030, we're fairly well balanced in terms of the supply and demand. Once we get to 2030, where some of these sustainability targets mature and the Refuel EU legislation goes up to 6%, we're starting to, and there's not as many projects that have been announced, that's when we start to see challenges, not only from capacity, but also from the feedstocks that are available, or the feedstock that we're currently using, I should say. We're currently using waste-based oils, that kind of thing. We need new technologies to come online. There's lots of businesses doing good work in that, including ourselves, where we have different types of wastes. We look at e-fuels and things like this, these very innovative things, but probably not starting until early 2030s. If we can get that investment, there are feedstocks available. That's part of the assessment that we do. The feedstocks are there. The technology is being developed. We need the costs to come down, so we need that investment. We need all this collaboration, but it is going to be a challenge. It is going to be a challenge. So till 2030, we're just about balanced. If things go how we say they are, and they probably won't, but that's...
well, and obviously the response to some of these incentive signals, I mean, if we can get actually 6% uptake and whether that match happens is going to be a very strong indicator between now and 2030 about whether the investment is ready to come into at least the more advanced, if not even at least more production. Great, please, we have a question up here in the back on the right, and then maybe we'll go over here onto the side.
Thank you very much. Paul Wilson from Smart Cities World. I've been following Zero Avia and their amazing journey into hydrogen. So I was intrigued to hear you being a little bit talking that down as if it won't happen as fast. I wonder if you could talk about that. And also I follow Vertical Aerospace and their eVTOLs and electric flight. And I haven't heard you talk too much about that. I wondered if you could talk about both of those companies.
I offered some comments on hydrogen, so happy to chip in. But I think as a company that actually buys airplanes, which we don't, Lauren may want to give a view as well. But very briefly on hydrogen, no, don't read it as downbeat, but just I guess what we're very focused on net zero by 2050 and what will get us there. And I think if you look at, and this is partly a Heathrow comment, and it's partly a comment on what dent could hydrogen make in those emissions for the fleet mix at Heathrow, which is generally jet aircraft, 100 seats and above, long haul, up to 400 seats and above. Do we see those hydrogen aircraft in that kind of size category entering service before 2050? I think the latest evidence is probably not. Airbus had a real ambition and I think is still supporting R&D in this space, but for potentially a narrow body jet, so a plane you might get to another part of Europe, 100 to 200 seats on a 2 or 3 hour flight, potentially entering service by the middle of the next decade. And I think the latest evidence is saying that that's probably further out. I've talked a lot to Zero Avia, I've been to their facilities. It's really exciting what they're doing when you see an aircraft where the only emission you're producing is water. But I think if the test is, will this deliver significant emissions reductions this side of 2050? Probably not. If the question is this an important technology to continue to evaluate and develop because it could scale up? And by the way, we're still going to need emissions reductions in the second half of the century. Absolutely. So an electric aircraft, Lauren probably better placed on. So.
Lauren, buy these planes?
Yeah. So, I mean, we've invested in Zero Avia. We've invested in multiple electric vertical takeoff and landing companies. We've invested in blended wing companies like Jet Zero. It literally looks like a triangle. And what's cool about that is that it requires half the amount of fuel as a conventional airplane today. So we are putting our opportunities in multiple places because I think we need all of it. What I will say, hydrogen infrastructure is lacking. And if you say hydrogen as a propulsion technology, there's no way we're going to fly a plane from one location to another that doesn't have the infrastructure to refuel. The tankering concept around tankering hydrogen is, from a risk and safety perspective, is problematic. From a hybrid technology, yeah, we're really enthusiastic about that. Also electric. Now, I'm also responsible at United for converting all of our ground equipment to electric ground equipment. So all of the pushback tugs, all of the baggage carriers that you guys see at Planeside, we would love to see all of those powered by renewable power. We can't even today get the infrastructure to convert our ground equipment, let alone an aircraft, let alone a fleet of aircraft to electric. So we've got some infrastructure challenges, as we just heard, across the board in almost every station. And we're working very hard to make sure that not only can we convert for near-term needs, but we can anticipate the next decade plus what kind of technology we expect to come in and figure out a way to get that capital into each one of those airports. We fly to 350 different locations. So, I mean, it's a big, big infrastructure problem globally, and we need to have confidence in the capacity at every single one of them to enable these new technologies to come on. But we're absolutely working those issues.
Great. Over here, please. Question, yeah. Thank you.
Thank you. I think it's for Lauren. I was curious if you could comment a bit more about some other policy possibilities that may exist in the U.S. away from the federal government, maybe at the state level.
Oh, yeah.
Such as, I mean, would it ever make sense for, say, the governor of the state of New York and Illinois and maybe Georgia to say, look, if you want to fly your airplane to one of our airports, you need to have 1%, 3%, or 5% of your fuel has to be SAF. Is that something that could move the needle? Or?
So state policy in the United States is crucial. And I think generally as we see this inconsistency in federal policy, a lot of states are stepping in different capacities to help sort of moderate some of those policies. And I think for sustainable aviation fuels, we absolutely would love to see more engagement. California has long time been a leader in that space. They have a low carbon fuel standard. They are looking at a SAF tax credit for production right now. So that would be additive, which would be huge. The whole Northwest region is looking at different structures. Colorado and other geographies, they're looking at production credits. Illinois, so United helped work with the state legislature in the state of Illinois to come up with a credit that went into effect about 18 months ago, and it's for airlines. So it's for use of SAF in any Illinois airport, which is huge because we have total transparency into the pricing of that SAF, whereas we don't necessarily with the production credits. United has been able to really drive through, 100% increase year over year in SAF supply because of the incentive in Illinois, and that is our hometown hub. For those that aren't aware, it's a big deal. So there's discussions in New York, New Jersey, I can go on, but the more that states are willing to step up, we will follow the numbers. We're going to follow the economics, and we're going to deliver. We've proven last year that you put it into the pipeline and you can basically ship it anywhere in the United States through the fueling infrastructure. So now it's just a question of where do you want to direct those molecules. And so that's exactly kind of where the policy needs to step in and drive that supply to your backyard so you actually get it into your airports.
Yeah.
But it's a big deal, big opportunity.
Yeah, if we talk about SAF pricing today, and the US is the cheapest market for SAF because of the incentives that you can stack, the IRA, LCFS, you got RINs, these stack on top of each other to actually make it as cheap as possible. If we're coming back to sort of corporate purchasing, if you're a corporate in Europe or in Asia, you can still purchase SAF that was supplied in the US at that low price, so you can still benefit from those incentives. What we want is the same sort of things in other countries as well, like we have in Heathrow, but also developing in other areas around the world.
Great. That's, I think, a nice place to leave this, given the time. I think what I take away from this, obviously, is, there are sticks that can be valuable, but there are obviously carrots, both at the policy level and perhaps still an enduring sort of carrot force also at the corporate level. And all of these are going to drive whether sort of future projects are going to be bankable, whether it's an expansion of production of the SAF that we know, or it's looking at future technologies in SAF and beyond, if we can get the infrastructure in place. So I want to close there. I want to thank very much panelists, Lauren Riley, Matthew Gorman, Jez Lowe. Thanks very much for joining me, and thanks to all of you.